Hello, investors. It's Don Vandenbord, Chief Investment Officer with Revere Asset Management. Today is Friday, May 10th, 4:57 p.m. Eastern Time, coming to you from the financial capital of the South, St. Augustine Beach, Florida, with tonight's Revere Roundup daily market insight video. Market state, we're in an uptrend that kicked off this Monday with some strength in leaders and the indexes. See the trend gauge over here? We did close the week with the coveted 4 green arrows. Leaders acting just fine, and all 5 of the major indexes trending above the short-term 21-day exponential moving average, the medium-term 50-day moving average, and the long-term 200-day moving average. We use this gauge as a signal to allocate client capital. We want to make sure that the short-term, medium-term, and long-term trends are all positive, and we want to see leading stocks acting well. So what happened today? Market looked absolutely stellar for the first 30 minutes. We gapped up in the morning, and right at 10 o'clock, University of Michigan consumer sentiment data came out, and it was awful. Consumers are expecting higher inflation than was expected, and their overall outlook was much weaker on the economy than was expected. There's a pretty strong correlation between the indexes, the market, and consumer sentiment. And the market sold off pretty hard for about 90 minutes, uh, made higher highs and higher lows in tight range, kind of a weak bounce into the end of the day. All in all, kind of a stall day after we broke out of that little flag that the market was putting in, a bull flag, and looked like we were going to follow through to the upside today. Leaders were ripping, but as I said, that paused, uh, dead stop at 10 o'clock Eastern time. And even though the indexes, the S&P and the NASDAQ recovered, some of the leaders that were strong very early did not recoup that initial move higher in the morning. So we'll call it a stall day. One stall day really doesn't kill anything. It was still an excellent week for the market. Here are the final numbers. 21 over 21 list, mixed, 9 up, 11 down, 1 neutral, basically flat on the day. Big 8, this is the Magnificent 7 plus Netflix, down 0.34% on average, led to the downside by Tesla. The RG8, this is our 8 growth ETF composite, down a little more than 0.5%. ARK-K, by far the worst component, down 2.8%. No coincidence that Tesla is a top 5 holding in ARK-K. In fact, we were on our afternoon call with the team. We were looking at the holdings in ARK-K, and the top 10 were just getting blasted. Just terrible stock selection in that, and it actually has me thinking about removing it from the RG8. The theory is when the market's working that Cathie Wood, who is a quote unquote fantastic visionary tech investor, would be in the best names. And you look at the charts of those names and they're just not the best names. Okay, to the indexes now. S&P 500 opened up about 1/3% and was up over 0.5%, faded to red, then bounced as the afternoon progressed up 0.16% on the day, equal weight, same return. Market cap weight and equal weight NASDAQ 100, basically with the same return as well, up 0.24%. The Dow up 1/3%. Mid caps down 1/10. Russell 2000 small caps down 0.67%, led to the downside by oil names. Got hit pretty hard today. Global diversified 60/40 stock bond down 0.03%. The 2 ETFs we use for this are ACWI, which is basically the same as VT. That's a Vanguard ETF, and BNDW, global bond. So 60/40 and weight them accordingly. In-house, our flagship portfolio, GROTECTION, up almost 1% early, faded. As I said, the leaders faded and didn't really bounce as the market came back a bit in the afternoon, but still up on the day 0.18%. We'll take a look at the portfolio. What we got stopped on two things today, and we'll take a look at the 2121 as it exists now and some candidates for next week. We reconfigure it over the weekend based on relative strength and diversification among sectors. So let's get into it. We'll start off with the S&P 500. I'll bring up the 5-minute chart so you can see the intraday action. There's the strong gap up and the very strong follow through to the upside. And then boom, right at 10 o'clock Eastern time, that consumer sentiment data came out. Pretty harsh drop over the next 30 minutes, a little bit of a bounce. You can see something very you see all the time on different time frames of three waves down, 1, 2, 3, and then lower highs, or sorry, higher lows and higher highs into the close, but still closing below that 30-minute range after we pierced that after 10 o'clock. Still not a bad week though at all. In fact, now that we went through the trend gauge, what I like to do on Fridays is allow you to see in the upper right here what the weekly performance and what the weekly candles look like for everything that I have on the daily chart. So here's your daily S&P 500. Here's your weekly. Very clear action over the last 4 weeks. We broke below the 10-week line. That's the red line, the equivalent of the 50-day moving average. Bounced 3 times at the 20-week moving average. That's the equivalent of the 100-day moving average on a daily chart, and then broke up through it. And it makes the lows of this week pretty critical as they coincide right with that 10-week and or 50-day moving average. Back to the daily chart next early next week, as long as the market doesn't break down, that 21-day moving average will move back above the 50-day, and then we'll have the moving averages configured the way we prefer them to be, which is how they were this entire 4.5-month run off of the November lows, that being with the 8-day exponential above the 21-day exponential, above the 50-day, above the 200-day. The market does its best work when those moving averages are stacked in from shortest to longest. So with the stall day, to overcome that, what we need to do is clear today's highs. If we pull back, we're obviously looking to the short-term 8-day exponential moving average for the first touch, and then we'll evaluate that 5,200 level, which held on the low. The whole low today held about 5,209 was today's low, and then the moving averages. So we'll see what next week brings. We've got PPI on Tuesday and CPI on Wednesday. That key inflation data will no doubt impact the market's reaction as we keep a close eye on what's going on, both from an inflation standpoint, a growth standpoint, because stagflation is the worst thing you want to see in an economy, and that usually trickles through to what's going on in the overall markets. NASDAQ 100. You can see the stalling action there as well. Higher high closed a little below half of the range. Nothing wrong with it at all. You can see the 10-week also playing a key role here on the weekly chart, up 1.5% on the week. Dow Jones Industrial Average, 2.2% on the week. You can see the 10-week playing a key role there as well, and 8 days up on the Dow, really rocking, showing some relative strength this week. S&P 400 mid-cap index reversed at the 3,000 level, up 2.2% on the week. Chart looks fine, relative strength over the last 3 weeks, and the Russell 2000. No relative strength on the week, up 1.2% on the week, but overall relative strength over the last 3 weeks and closing above all the moving averages. So those are our 5 major indexes. Let's go to the VIX. VIX made a lower low today. Wow. really stretched to the downside, down 1.1% with a 12 handle. Not too many lows below that going back to December. But then again, we haven't quite eclipsed the highs from March either. So staying in sync there. Let's go to the dollar. Strength in the dollar today ran into the declining 21-day moving average. So this was after basically a 4 to 5 day bounce on the dollar off the 50-day moving average, pulling back now the past 2 days and then bouncing today. How did that correspond to the precious metals? You got gold up 0.8% with a gap up, bottom of the range, however, and strong up 2.7% on the week. Gold stocks not up today, ran into the top of the handle in this cup and handle that's forming, but still up 5.4% on the week. Very nice action there on gold names. And silver ETF SLV down 1/3% on the day, ran into the 26 level, but up 6.4% on the week. You can see it bouncing at that red line, the 10-week moving average. Bitcoin, IBIT is the ETF that we play it with, ran into the declining 21-day moving average, down 2.3% on the week as it continues to make lower highs. Let's move on to bonds now. Broad bond index BND, basically flat for the week, and you can see the tight range that we traded in today. That's the broad bond index. Here's the long bond, down 0.5%. You know, if the price is down, that the yields are going to be higher. EYX up 0.87% today, down 1/3% overall for the week. And the 10-year, the TNX, up 1.2% today, up 0.1% on the week. So that's our inner asset correlation chart portion of the show. Let's move on to the tail of the tape. There's the headline on the news that I pointed out. Up 6 out of 7 days on the S&P 500, 7 days above the 8-day exponential moving average, 6 days above the 21-day. We maintain our short-term positive expectations as long as we stay above this 21-day moving average. Not a whole lot of standout sectors today. Semiconductors and GLD, the gold ETF, to the upside along with the dollar. On the downside, oils, retail, discretionary, led to the downside by Amazon and Tesla, and real estate also down today with interest rates picking up. Two stops hitting the portfolio today, VKTX and Spotify. Just underwhelming action. Didn't actually take out our stops, but when the market reversed, we're always evaluating the strongest to the weakest. When the market reversed, we pulled the weeds in order to make sure that we've got capital available for anything that we may need to add to, as we certainly have room to get much more invested. We still have 20% cash in short-term T-bills, and if we see the opportunities, money will come out of that and go into individual names. So with those two cells, portfolio adjusted beta down a touch from 1.43 to 1.36. Bottom line for the day, stalling, early strength reversed on weak consumer data. Small caps were negative, but very positive action for the week as we went back into an uptrend. So let's get to the 21 over 21 now. And first we'll go through, I've got 25 stocks in here, a couple added during the week. You'll see the ones that have broken the 21. Keep an eye on the upper right to see what their return was for the week while I go through the daily charts. And the green flag over here means we own it in the portfolio. Start off with First Solar, ran into that 200 level again today and reversed along with the market and was down on the week by 1/4%. Freeport, looking very nice. Gap up today, closed mid-range, up 2.2% on the week. Constellation, great reaction to the earnings report. Got a little ahead of itself and reversed today, but only down 0.5% and up a very nice 10.3% on the week. BRT ran into that Livermore 100 level and reversed, down 2.6% on the week, but still up 2.5%. Sorry, 2.6% on the day, but still up 2.6% for the week, and definitely something that we're looking to add to. It's our second largest position, but we've got some room to add to this. GDX ran into, as I mentioned, the top of that handle, that big reversal level from a couple of weeks ago, but still up 5.4% on the week. Kava, it's just a standout action, gapped up, stayed in the upper third of the range, up 9.6% on the week, including 5% today. NVIDIA flagging very nicely off of the 3-day higher move that coincided with the move up in the market, up 1.3% on the day, basically the same as what it was up for the week. You can see this 10-week moving average playing a key support role here over the last couple of weeks, closing above that level while dipping below it intra-week. Micron, some strength here today, above average volume relative to the prior 3 days when it was consolidating, up 3% on the day and up 5.7% on the week. Pure Storage, tight action, up 0.5% today, up 4.2% on the week. CrowdStrike, our biggest position, came out of the box screaming today nicely, but reversed. Still held the breakout level above that 320 level, up 1% on the day, up 3.4% on the week. And Carrier, the last position that we're going to go through here that we own, up 0.4 on the day, up 5.5 on the week. Carrier, not just HVAC for your house, they're also getting very much involved in cooling for data centers, these AI data centers, which is tons of capital being poured into these by the big tech companies. All right, here's the rest of the portfolio. Cameco, uranium down 2.5% on the day, up 5% on the week. Coupang. Okay, so here's a situation where gap down on its earnings report on heavy volume. It's bounced the last 2 days on lighter volume, but reclaimed the 21-day moving average. Very often in leading stocks, 1 day down is all it takes to get rid of all of the weak holders. And then the strong hands buy those shares and hold on to them. So this is really good action on Coupang from a reaction after earnings. And note the 2025 earnings, 52 cents a share, 200% growth. This is not a Chinese company. It's a Korean company, and gapped up here because they have pricing power. They announced that they were increasing their fees on this gap up day and took off to the upside and still above that level. So consider this an inflection point that day, and that level held on the pullback. So if you didn't know anything about Coupang over the last 3 weeks, just know that it's still above the level despite its earnings report. 23% sales growth, not so good on earnings here. I believe they're spending a lot on growth is the reason for the earnings deceleration, but it's supposed to pick back up next week or next year. And not sure if this is going to stay on the list or not. We might put it on a back to the universe list and just keep an eye on it. Down 2.2% on the week. SE, they'll have earnings next week. Not the greatest week for this, down 2.6%, stalling a little bit over the last week, but that was a nice run up after this move higher. Goldman Sachs continues to just trend higher. Real strength over the last 4 weeks, up 3.8%. For the week, American Express, same situation, up 5% on the week. Generac, here's another one where one bad day on its earnings report got rid of all the weak holders. By the end of last week, it was back above the 21-day moving average, and it's continued to move higher today, although it is wedging, no volume there, but still up 3.1% on the week. What we need to see is to take out this 140 level, which was prior resistance twice over the last month and a half, and also need to see that relative strength line confirm the move. GEV, another energy company involved in data centers and much more, up less than 1% on the week. Spotify, this is the weakest in the portfolio. Notice it ran into this 300 level twice this week, We added what the first time it tried to get above. We didn't add today, and then it faded. Um, and relative weakness over the last week and a half. It ended up being the weakest one in the portfolio. It's still above the 21-day moving average, but this will come out, and I'm certain I'll find something better than this to replace it next week. Down 0.5% on the week. All in all, nothing really wrong with it on the weekly chart, but this is a 21 over 21 leaders list, and it hasn't led since it reported earnings. It reported earnings, had two ugly days down after that, followed by a bounce, but really no relative strength since that bounce. We want better. Very nice fundamentals, however. A-Lab, this will be coming off. This was a bad reaction to its earnings report, ran into the declining 21-day today and failed, down 8.9% on the week. We got stopped out on this earlier in the week. Transmedics continues to be very strong. This is a really nice tight action up at the top of this prior weekly candle, up 1.2% on the week. Anytime something moves up on strength like this and doesn't give it back, it warrants a spot on your leaders list. Very nice fundamentals as well. HWM, the now price action and relative strength leader in the aerospace defense names, same kind of a setup here as TMDX, follow through strength after the big candle for earnings. Abercrombie and Fitch took a break today, up less than 1% on the week, just kind of forming the right side of this nice base after a very strong run going back to late last year. Pulte, this is probably going to come off the list and be replaced with an ETF that if we decide to go into home builders, there's really three, Meritage, Pulte, and Toll. The charts basically look the same. We don't know if we're going to pick the right one. And it's not likely that if a group move starts because interest rates are pulling back, that any of the one would outperform the nail ETF. I'll show that. It isn't as nice a chart pattern, but we don't go by that. We go by ITB. Nail is a derivative of ITB, but this is set up here for a nice bounce. And if some strength comes in, positive volume patterns over the last 2 months after some selling as interest rates went higher. But really all it's doing is forming a nice base here. And on a relative strength standpoint, none of these individual names really, as I said, outperform nail if that's how we decide to go into it. One possible add for next week is the last chart here, and that is going to be Nutanix, another data center software name. Look at that. Not too many stocks 8 days up in a row recently, breaking out of this flat base, up 8.6% on the week. And that is going to wrap it. Quite certain. Yes, that's it. So as always, like to hear from you. The email is don@revereasset.com. The phone's 855-REAL-WEALTH. Website, revereasset.com. Twitter, @dvandenbord. YouTube, Revere Asset. We also post these videos to Twitter as soon as they're ready, and it will be ready as soon as I'm finished producing it in about 15 minutes. Reminder, it's not how much you make in the market, it's how much of that you can keep. Our flagship portfolio is named GROTECTION because we grow assets in uptrends, protect them during downtrends. If the market winds are not at our back, we're not all out of the market. We maintain a core holding in the S&P 500, sometimes in small cap indexes, or the Dow if those are outperforming, but primarily the S&P 500 as long as the market is above this big black line here. This is where all bear markets occur, below the 200-day moving average. When you're under there, you get out of the way. It saved a lot of angst. That's the equivalent of the black line on here. The 40-week moving average saved a lot of angst during 2022. Until we got back above and started to trend higher. A little bit of a shakeout here back below it. We're never going to be 100% perfect here, but we get the big trends correctly and you get to sleep at night. Our clients get to sleep at night, I should say. And with that, I'm going to wrap it for the week ending May 10th. 2024. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great weekend.